Oh my God, oh my God, oh my God. Panic, panic, panic. Is it going to 70,000? Are we all going to die? What am I going to do? No, no, no. In 2017, it went down 28% in 5 days, and then it kind of sideways chopped and then rallied. It will decouple from this chart going forwards from here. That I will give a high probability, 70% probability. The low is in, it will decouple, and eventually it will go. The next phase will be alt season. Basically, we've just crossed 50 in the ISM. That doesn't mean instant alt season right now. Give me my alts. Where's banana zone? Banana zone's not happening. The banana zone's failed. You've slipped on the banana skin. Shut the fuck up. It takes time. It'll all play out. As the ISM accelerates, altcoins will accelerate.
The cryptocurrency market has seen some volatility in recent weeks, largely driven by macroeconomic factors and investor sentiment. On Monday, Bitcoin hit a high of $98,400, but soon after, it experienced a slight dip, reaching an intraday low of $95,000 on Tuesday. This fluctuation was partly driven by investor anticipation surrounding the January Consumer Price Index report, which could impact the Federal Reserve's decisions regarding interest rate cuts in 2025. Higher inflation rates might deter interest rate cuts, making lower-risk assets more attractive compared to cryptocurrencies. However, Federal Reserve Chair Jerome Powell addressed this concern on Tuesday, stating that the central bank does not need to rush into another round of rate cut. He noted that interest rates had been significantly reduced last year and pointed out that the economy remains strong. Powell emphasized during his testimony before the Senate Banking Committee that, with the current policy stance less restrictive than before and the economy still robust, there is no urgency to adjust the policy further. Powell's comments echoed those made in January when the Fed decided to maintain its key short-term interest rate. The central bank is scheduled to meet again in March. Meanwhile, while the cryptocurrency market has yet to fully recover from Tuesday's lows or reach new highs for 2025, many investors remain hopeful. Real Vision CEO Raoul, a prominent analyst and investor, continues to be extremely bullish on the crypto market in 2025. According to Powell, the key factor needed for prices to soar is an increase in liquidity from central bank. He believes this trigger is imminent and will lead to what he terms Banana Zone Phase 2, or altcoin season. Have you ever wondered who the crypto advisor must be for the biggest names in the online business space, such as Aman Godzi, Andrew Tate, and Luke Belmar? Well, there's one crypto investor who was the consultant for all of them, and he actually shares the systems he gave these influencers to make them millions on his YouTube channel for free, growing an 8 million portfolio by the age of 25. Daniel McAvoy is one of the best crypto investors you'll find online, specializing in long-term investments and meme coin investing. His YouTube channel is packed with incredibly valuable videos that will help you make life-changing wealth from crypto. Start watching one of the greats today, link in the description of this video.
Global M2, last time, this time, same pattern. That is the same pattern as the dollar. It should all play out the same way. Global M2 is a good proxy for global liquidity, which means number go up. The other thing that people get very confused about is they're like, well, what happens if the Fed don't cut much more? I don't care. What happens if rates don't go down a lot? I don't care. What happens if they don't drain the Treasury General account? I don't care. You've got to understand the global picture is the big picture. And the global picture, like 2017, will most likely be driven by China. I think the US will stimulate, but China is the big one. Chinese bond yields are now at 1% or somewhere close to it. They have run out of runway. And what does running out of runway? Jay Powell told you today, running out of runway, i.e. no rates to cut, means QE, baby, and more cowbell. The Chinese have I think when I looked at the calculation in my Excel, I think I got to, they need a ton of QE to do. So yeah, I think the calculation was a ton. They have to print money like crazy. Why? They have an aging population, massive debts. They need to service their debts. Everybody's in the same boat. This, my friends, is the everything code. I've bleated on forever about it. You kind of half get it. It's the fact that the only way of servicing the debts is to debase the currency, and the Chinese will do a lot of debasing. However, they can't do it until Trump beats them over the head with the strong dollar, which is happening today, and saying, you will agree our tariffs, which is happening right now. And when they agree the tariffs, he will say, I'll give you the carrot after the stick. The carrot is a weaker dollar. He did that in 2017. He will do it again now. The weaker dollar plus the lack of spending from Doge, i.e. the lowering of spending, will mean that rates come down as well. And what we get is the banana zone, the next phase. It is all to play for. There is nothing else going on. There is nothing to panic about. There is nothing wrong. It is all a piece of beauty. Global M2, every time we get to this point, it comes, it breaks out, it retests, it goes higher. We're exactly at the right point where this should happen again. Next phase, Global M2 going up, the weaker dollar. There's Global M2 and Bitcoin. Oh my God, I hear you say, because I hear you all the time. Oh my God, oh my God, oh my God. Panic, panic, panic. Is it going to 70,000? Are we all going to die? What am I going to do? No, no, no. In 2017, it went down 28% in 5 days, and then it kind of sideways chopped and then rallied. It will decouple from this chart going forwards from here. That I will give a high probability, 70% probability. The low is in. It will decouple, and eventually it will go. The next phase will be alt season. The business cycle is picking up. New orders are screaming higher. The business cycle is the driver of global earnings. Global earnings get recycled into risk. Recycling into risk means risk assets like small cap stocks, through to commodities, through to alts in crypto go higher. The business cycle has only just started. A number above 50 for the ISM is expansion of the business cycle. We've just had our first print since God knows when of this going on the upside through 50. The last time was 2020. So we've got the cycle to play out. We are nowhere near the peak in the cycle, which I'll come to in a sec. New orders, less inventories. This is a 3-month lead, screaming even higher. The business cycle is going to pick up fast. And financial conditions, the dollar, oil, rates, they say, well, it should go to at least 55.6, but that would be low for the ISM because guess what? We think the dollar goes lower, rates go lower, and oil goes lower. So that should push this up into the 60s, which extends the cycle further. So we're at least 9 months away from a cycle peak. So it is very interesting where we are. It is all very positive. When we look at the overbought, oversold indicator of where we are in the cycle with crypto, we're nowhere near overbought. We're just starting. Bitcoin, every time the ISM peaks, Bitcoin peaks. When the ISM breaks 50, Bitcoin accelerates. We are at the acceleration phase, not the peaking phase. Anybody who tells you otherwise is a f***ing moron. So we're at the acceleration phase. We've got liquidity coming. The ISM is not going to peak until the end of the year, maybe even into 2026. There is nothing, literally nothing to concern yourself. Here's the ISM and a kind of detrended, some fancy thing that Julian does with this. Gives you a pricing model of Bitcoin. I mean, if the ISM goes up to 60, where it should be going, I mean, we're talking Bitcoin in the 250, 350, whatever thousand level. We ain't even started. Oh, and altcoins will outperform Bitcoin. Here's altcoins percentage of total market cap. Basically, we've just crossed 50 in the ISM. That doesn't mean instant alt season right now. Give me my alts. Where's banana zone? Banana zone's not happening. The banana zone's failed. You've slipped on the banana skin. Shut the up. It takes time. It'll all play out. As the ISM accelerates, altcoins will accelerate.
Pal's banana zone concept describes 3 distinct phases in the cryptocurrency market cycle. Banana zone phase 1 is the initial price breakout and surge. This stage began in November, with Bitcoin hitting several new all-time highs.
Raoul Pal's banana zone outlines 3 distinct phases in the cryptocurrency market cycle. Phase 1, known as the initial price breakout and surge, began in November, with Bitcoin reaching new all-time highs, including its peak of $18,000 on December 17, 2024. After this surge, the market enters a consolidation phase, where it stabilizes following the initial gains. Pal compares this consolidation to the patterns seen during the 2016 to 2017 cycle, which is where we are currently, according to his analysis. The next stage, referred to as banana singularity, or phase 2 of the banana zone, is marked by a sharp rise in altcoin prices. During this phase, investor enthusiasm expands beyond major cryptocurrencies like Bitcoin and Ethereum, prompting substantial investments in a variety of altcoins. This surge in interest results in significant price increases across many alternative cryptocurrencies. Powell believes this phase will begin soon, triggered by policies from President Trump aimed at weakening the dollar, allowing central banks to expand their balance sheet. Following the altcoin boom, Powell anticipates another period of consolidation before the onset of the final phase, Banana Zone Phase 3. Throughout all three phases, Powell consistently emphasizes that liquidity is the key driver of market movement. Here are more clips from his video.
So, wages, wage tracker growth going lower. Therefore, we will not see wages increasing for a while, if at all, depending whether AI breaks it entirely. Ain't concerned about that. Oh, home prices. Well, home prices are a massive drag because there's a 17-month lead. So home prices will be bringing down CPI shelter, which is the largest part of CPI. If the largest part of core CPI is shelter, it ain't going up. When rates go down, guess what? Owner equivalence rents come down, and that drags down CPI. Look at the Cleveland New Tenant Rent Index, 3-quarter lead. It's puking. It's gone below zero. There is no inflation, my friends. Let's take away shelter and look at all items less shelter, because shelter's the lagging one, 1.9%. I mean, really, dudes? And then we'd use the Mount Fuji chart of truth that Julian and I have been using forever. Like, we take all the inflation episodes, the major inflation episodes, compare them to this one, and guess what? Inflation is coming lower. We will get cyclical inflation later in the thing. There's nothing structural. We're not going back to the 1970s. None of that's going to happen. Literally none of that's going to happen. Tariffs are not inflationary. It wasn't inflationary last time. It won't be this time. None of that is going to happen. It'll just be a pretty ordinary cycle. So that tells me dips are for buying. Let's have a look at it versus the 2017 cycle. Are we near the top? No, we're fucking near. Are we going to follow this exactly? No. Are we going to do decently based on this? I think so. I think it's going to rhyme more than people expect, and we will have a stronger cycle than people expect. The NASDAQ, for those of you who still bother to trade equities, which I know some of you did, it's following the same pattern. It's all like a rerun of the previous Trump, because he's got the same policies, basically, apart from with the new tech stimulus. So let's go back. Again, Julian talked about this in his presentation, but I want to hammer it home to you. You guys all have PTSD from the last cycle. It finished early. Is it going to happen again? Am I going to lose my money? And am I going to round trip all my gains? Will I die? Will I have to drink Bud Light for the rest of my life? Or can I drink champagne? All of these stories. Blah, 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 blah. The orange zone market goes higher, right? But it didn't really in 2021. Well, what happened in 2021? Oh, the ISM peaked. Do you remember? Raoul told you a minute ago, when the ISM peaks is when you need to be worried. Oh, yes, the ISM peaked in March 2020, 2021. Previously, it peaked in January, February 2018. Guess what? That's when ETH peaked. Also 2013. It works every time. And where are we now? Oh, we're at the bottom of the ISM. Oh, how silly of me to be worried about about the market peaking. For fuck's sake, people. Oh, yeah, from the halving. We've only done, is it from the halving or from the low? We've only done an 8x from the low. We did an 85x and a 46x. We only started. Liquidity, as I said, peaked in March 2021. We're now negative currently by this measure of liquidity. If I use the global M2, we're just positive, but we're nowhere near there to be a liquidity peak. As we said, the ISM peaked March 2021. So let's look at it. That was what was happening in March 2021. Look at that. Financial conditions were falling. And the ISM, well, it had peaked at over 60. And let's look at the current one now. You ready, kids? The opposite. It's bottoming. And the green, the financial conditions index, will be going the other way. And the last time it did this, it went up a lot, blah, blah, blah. This is the chart. Again, everyone's like, where's my banana zone? It's failed. It's like the banana zone is a period of time and a price action that is nuanced because it goes in bursts and then corrections. So the banana zone started from September onwards last year. The market came up and did what it did every single time. The correction after banana zone phase 1. So correction phase, Then Banana Zone phase 2 kicks in and it goes fucking la. It goes bananas. Then guess what? Correction phase 2 fits in. And then we go to the final blow off top.
Goldman Sachs has significantly increased its exposure to Bitcoin, now holding $1.57 billion in Bitcoin ETFs, as revealed in its latest 13F filing with the U.S. Securities and Exchange Commission. This marks a substantial rise of $121.1 million from the previous quarter, highlighting a strong institutional shift toward digital asset. A large portion of this exposure comes from 24.7 million shares of BlackRock's iShares Bitcoin Trust, valued at approximately $1.27 billion, which is an 88% increase from the last quarter. Additionally, the bank raised its stake in Fidelity's Wise Origin Bitcoin ETF by $288 million, reflecting a 105% growth. Goldman Sachs has also expanded its digital asset engagement through options trading related to Bitcoin ETFs, totaling $760 million. This includes $527 million in put options and $157 million in call options via IBIT. While the bank closed minor positions in other funds like Bitwise BITB and Grayscale's Mini Bitcoin Trust, it continues to strengthen its position in the cryptocurrency market. Alongside its Bitcoin investments, Goldman Sachs saw a dramatic surge in its Ethereum exposure, growing from $25.1 million to $476.5 million in just one quarter, nearly a 19-fold increase. These moves reflect Goldman Sachs' strategy to deepen its involvement in the evolving digital asset space. The firm's aggressive approach positions it as a leader in the growing cryptocurrency market. As other financial giants take note of this shift, it remains to be seen whether they will follow suit. What are your thoughts on Goldman Sachs' actions and the potential impact on the broader financial landscape? Let us know in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.